Okay, welcome to the deep dive. Today we're looking at some material you shared. It's a really detailed exploration of investing in gold coins.
Yeah, it's fascinating stuff. Connects, really deep history with what's happening financially today.
Absolutely. So our goal here, our mission for this deep dive, is to really unpack what this source is telling us about gold coins as an investment.
Hmm.
We want to get into the benefits, the risks, which are pretty critical, the practical steps, and, even a bit of the history behind it all.
Give you a clear picture quickly.
Exactly, because gold, like you said, it's more than just shiny metal. It's been central to finance for, well, ages.
Millennia, really.
Right, so let's dig into what this source says about why people still consider gold coins and what you really need to know if you're thinking about it. Let's jump in. Okay, so the core idea in this material seems to be using gold coins as this time-tested way to preserve wealth. What's the fundamental appeal according to this source?
Well, the source really emphasizes why someone might go for gold coins. It points to stability, security,
Mm-hmm.
especially when the markets are, volatile.
Okay.
And then there's the tangibility, the fact you can actually hold it in your hand.
That physical aspect.
Yeah.
Yeah, that seems really important to people.
Yes. And it's framed, crucially, as a hedge against economic instability.
Right.
The source brings up the history, how gold tends to hold value over long periods, unlike, say, paper money that can lose value through inflation.
So if you're listening, you might ask yourself, why would I want something tangible like that in my portfolio?
Exactly. It often comes down to wanting a physical asset, something that feels maybe a bit more real, less tied to the ups and downs of purely digital or paper finance.
Now, if you are thinking about this, the source makes it clear pretty quickly it's not just a gold coin. There are different types, right?
Yeah.
And they seem to have different value drivers.
That's a real important distinction the material makes. You've got basically three main kinds. First up, gold bullion coins.
Mm.
These are minted pretty much purely for investment.
Mm.
Their value is tied directly to how much gold is in them and the current market price.
Simple enough.
Yeah, and they come in different weights. The source mentions the popular ones like the American Gold Eagle, Canadian Maple Leaf, the South African Krugerrand. The main thing is they're very liquid,
Hmm.
easy to buy, easy to sell based on that gold value.
So bullion is all about the metal content, the weight, purity. Got it. What else?
Then you've got gold-proof coins. Now, these are different. They're made with a much higher quality standard, often have this special, mirror-like finish.
Ah, okay. Fancy.
Kind of, yeah. And they're usually limited edition. They come with certificates, nice boxes.
So more than just the gold, then.
Exactly. The material points out they're usually more expensive than bullion coins of the same weight because collectors value the craftsmanship, the rarity, on top of the gold content.
Right, so there's that collectability factor layered on.
Precisely.
Cool.
And the third type is commemorative gold coins. These mark special events, anniversaries, that kind of thing. They often have historical meaning, usually limited production runs too. And like proof coins, their value isn't just the gold, it's also about rarity, historical interest for collectors.
Okay, that breakdown is helpful. So understanding these types shows you the value isn't always just, the raw metal. It can be about condition, rarity, history, other factors. The material definitely highlights some clear benefits to holding cut coins. What are the main advantages it points out?
One of the biggest ones discussed is its role as a hedge against inflation.
Right.
The core idea, as explained in the source, is that when paper money loses purchasing power, gold's value tends to, increase.
Makes sense.
And it gives a really potent example, the 2008 financial crisis. It mentions how gold prices shot up as investors were scrambling for a safe haven, somewhere to put their money away from failing banks and stocks.
Yeah, I remember that. That really underlines its potential as a sort of crisis insurance.
It does. And another benefit, which we touched on, is liquidity and tangibility. The source stresses that gold coins are highly liquid.
Meaning easy to sell.
Yeah, relatively easy to convert back into cash. Much quicker, say, than trying to sell property.
Oh, for sure. Much easier than selling a house.
Exactly. And again, there's that psychological draw of tangibility, owning a physical thing, especially when times feel uncertain. It provides a sense of security that, digital assets just don't offer in the same way.
So yeah, those benefits make a strong argument. But like any investment, the material also flags some pretty significant downsides to be aware of. Because yeah, no investment is risk-free, gold coins included. What are the big challenges or warnings this source highlights?
The material is quite upfront about the risks. Firstly, market volatility.
Ah, okay. So it's not always stable.
Well, while it's often seen as stable long-term, The price can actually bounce around quite a bit in the short term.
Hmm.
Global events, currency shifts, the general economy, these all push and pull the price.
Right.
The course uses that 2008 example again, but flips it. Prices soared then, sure. But the flip side is prices can fall when the economy is doing well and people feel confident in other assets.
So definitely not a guaranteed upward path.
Not at all. Then there's a very practical issue. Storage and security.
Right. You actually have to keep these things somewhere safe.
Exactly. They're valuable, they're physical, which makes them targets for theft. You have to think hard about storage. The source lists the usual options: a good home safe, a bank safety deposit box, maybe even professional vault services. Each has different security levels, different costs, different trade-offs.
That's a whole layer of complexity you don't get with, say, stocks in a brokerage account.
Precisely. And maybe one of the scariest risks mentioned is counterfeit risks.
Ooh, yeah. Fake gold coins.
Unfortunately, yes. It's a real problem. And buying a fake could mean, well, you lose that entire investment.
Wow.
Yeah.
Okay, that's definitely something to be vigilant about.
Absolutely. So understanding these potential problems, the price swings, storage headaches, the danger of fakes, is just as vital as knowing the potential benefits.
Okay, so given those risks, how does the material suggest you approach this smartly? What are the practical tips it offers?
A lot of the advice centers on tackling those risks, especially the counterfeit issue. The number one tip is purchase from reputable dealers.
That seems fundamental.
It really is. The source presents it as the best way to avoid fakes and ensure you're getting what you pay for. It even names examples like government mints, the U.S. Mint, Royal Canadian Mint, and established bullion dealers, mentioning APMEX, JM Bullion. Checking their history, reviews, certifications is key.
Right, do your homework on the seller. Makes sense.
And tied to that is verifying authenticity. Even with a good dealer, the source suggests knowing the coin's specific features, security marks.
Like watermarks on money, but for coins.
Sort of, yeah. Some modern coins have sophisticated anti-counterfeiting features. Or using testing tools, maybe getting a professional appraisal for anything particularly valuable or rare.
Okay, so multiple checks for peace of mind.
Yes. And it comes back to storage solutions again, reminding you to weigh, home convenience versus bank or vault security and cost. And another crucial point, insurance. The source stresses insuring valuable assets like gold coins. Apparently, there are specialized policies just for precious metals.
Huh, insurance. That's a detail I might easily overlook. Really important.
Definitely. And don't forget understanding tax implications.
Oh yeah, taxes. Always taxes.
Always. The material makes it clear rules vary a lot depending on where you live. Selling gold might mean capital gains tax. It strongly advises talking to a tax professional.
Good advice. Don't want any nasty surprises there.
And one final tip mentioned is diversifying your gold holdings. Maybe don't just buy one type of coin from one place. Consider a mix, some eagles, some maple leafs, maybe Austrian Philharmonics, just to spread the risk a bit.
Okay, so these steps seem like a practical roadmap based on the source for trying to protect your investment if you decide to go down this path. Taking a step back for a moment, the source also touches on the really long history of gold and maybe what really drives its price beyond just the day-to-day fluctuations.
Yeah, that adds some valuable perspective.
Yeah.
It briefly covers the historical significance. Gold's been used for thousands of years. Currency, jewelry, symbol of wealth, Egyptians, Romans, you name it.
Wow.
And gold coins themselves were first minted way back, like 6th century BC. This incredibly long history is part of why it's seen as such a stable, enduring asset.
It's kind of mind-blowing, isn't it? Something used as money thousands of years ago is still an investment people talk about today.
It really is unique in that way.
Yeah.
And the source also clarifies the key factors influencing value today. We mentioned supply and demand, geopolitical stuff, economic health. It also specifically adds global mining output, how much new gold is being found in central bank policies. Are central banks buying gold reserves or selling them? And that can have a big impact.
Right. So tracking those bigger global trends is important if you're watching the gold market.
Definitely. It shows it's not just about the coin itself. It's plugged into this long history and these major global economic and political forces.
And the material even gets into some common questions people have, like, can you actually put gold coins into your retirement savings?
Yes, it does address that. It explains you can, usually through something called a Gold IRA, a type of self-directed retirement account.
Okay.
But, and this is a key detail from the source, only certain IRS-approved gold coins are eligible. You can't just stick any old coin in there.
Okay. So specific rules apply. That's really good to know if retirement planning is your angle. Okay, wow. We've definitely covered a lot of ground based on this source material. We started with that basic idea, gold coins for preserving wealth. Then we looked at the different types, bullion, proof, commemorative.
Yeah, and how their value drivers can differ. Then we dug into the potential plus sides, hedging inflation, that 2008 example was powerful, and the whole liquidity and tangibility thing.
But just as importantly, we faced the risks. Market volatility, it's not always smooth sailing, the absolute need for secure storage, and that serious danger of counterfeits.
Right. And then we got practical with the source's advice. Finding reputable dealers, verifying coins, thinking through storage, getting insurance, checking taxes, maybe diversifying your coin types.
We even zoomed out to look at gold's ancient past and the modern forces, like mining and central banks, that shape its price.
And touched on that specific point about gold IRAs for retirement.
So the big picture message from this source seems to be, yes, gold coins can offer stability and diversification potential.
And it's a big, but they absolutely come with significant risks. Price swings, the practical issues of storage and security. These need careful thought and management.
Mm.
And doing your homework on dealers and understanding taxes
Oh.
are presented as just non-negotiable essential steps.
So hopefully after exploring this material, you have a much clearer idea of what investing in gold coins really involves, the good, the bad, the practicalities.
And maybe something to mull over. Considering gold's ancient history as this fundamental bedrock of value, and then you look at all the complex modern forces swirling around its price today, how does that simple gut-level appeal of holding a tangible piece of wealth really stack up against the modern complexities of actually securing it and figuring out its true value in our super digital interconnected age? Just something to think about.